All right, Rahul Bajoria with us, Head India Asian Economic Research at BofA Securities. Rahul, great to speak with you and congratulations on the new gig. Great to speak to you after you've joined this position. And on a good day, important day to understand what's happening with global economy, what's next for the Indian economy, etc. So let's start with that. The Fed has started the process. The baton now moves to Bank of England, Bank of Japan. When do you think the Reserve Bank of India jumps in with a rate cut?
Thank you, Tamanna, for your wishes. So I think at this point in time, the guidance from the RBI has been fairly clear. The governor has been sort of indicating that, they are still not done with the last mile, management of inflation. And as the target alignment is in sight, I think we are going to see maybe a shift in the policy communication in the last quarter of the year. So we think that while October is unlikely to be a live meeting, December is the first instance where we could see a small rate cut cycle begin. We think that inflation appears to be reasonably well in check, and growth also cyclically seems to be softening a bit, and that kind of sets the tone for the RBI also to move. But then it is going to be a much shallower rate cutting cycle in India than what we are likely to see elsewhere.
When you say shallower, what do you mean? What are you penciling in for the rest of this year, Rahul?
So in the current fiscal year, we think 50 basis points looks like a reasonable assessment. So, that kind of takes us to from 6.5% to 6% by the February meeting. And then we think that the RBI again will look at the supply side dynamics, wait for the monsoon cycle to play out. And if monsoons are normal as we are entering a La Nina cycle, then maybe another 50 basis points in the next fiscal year by December 2025, which takes you to a neutralish kind of a rate at 5.5%, which I think is the right level for a country which is looking at 7% trend growth and around 4% inflation.
In terms of economic outlook, and let me come to some of the points that were made by the Federal Reserve in that meeting, focus now for them at least shifts more on labor market rather than inflation as an issue. Will further 50 basis point cuts, at least in the rest of this calendar year, drive more flows towards India? How do you see the flows and India equation in light of what we've heard?
Yeah, so I think if we sort of take a view of what's happening in the US, there clearly seems to be an emphasis on kind of, trying to recalibrate the monetary policy, monetary policy to where the state of the economy is. And we do think that a front-loaded rate cutting cycle is quite likely. So we are looking for another 75 basis points of cuts in the US in the next quarter. So that's, 150 basis point and 125 basis point, depending on the incoming data. And then another 125 basis points of cuts next calendar year. So you are going to see a reasonably large cutting cycle. Now, in context of what it does to India, I just came back from the US. The feedback on India remains fairly and very comprehensively positive as far as structural flows into the economy is concerned. The lack of currency appreciation does make people a little bit reluctant to kind of really put their alpha to work in India right now. But I think from a structural standpoint, flows both in equity and debt markets are likely to continue, and we probably see a fairly strong BOP position both this fiscal year and next fiscal year. So I don't think that the investment outlook is going to change materially. What you probably end up seeing is just a timing of it might be a little bit more backloaded in the context of where the rate cycle in US pushes flows into emerging markets.
Rahul, good afternoon. Neeraj here. I heard you say that it will be a shallower cycle, and maybe you responded to that, but I would still want a pointed answer, if you will. What is your sense? Do we see action in India in October? Do we see December? Do we see Feb? Or is it difficult to call that right now?
No, I think our baseline is that December is the first meeting where you will probably see a rate cut coming through in India. We are expecting only 50 basis points in this fiscal year, which is kind of getting priced in as far as say the fixed income markets are concerned. But next year also we think there's room to cut rates by 50 basis points in India. So you're going to not see India move in line with what's happening with the Fed. I don't think that's ever been the case in the last few hiking and cutting cycles. But then with inflation aligning itself closer to 4% than we have seen in the last few years, there is no real need to keep real rates very elevated as it is right now. And credit growth is coming off as well. So, you are seeing signs of RBI also kind of coming to a point where rates can be recalibrated slightly lower. Not a need to like really cut, but kind of recalibrated slightly to the new economic realities.